Now let's shift our focus to earnings, and Blue Star has posted a steady set of numbers, and we have with us Vir Advani, the Managing Director of Blue Star, who's joining us to discuss the quarter gone by. Thank you very much, Vir. It's great to have you on the show here at Market Pulse on BTVI. Tell us and take us through the highlights first of this quarter numbers.
Sure, thank you so much. Just want to explain the numbers to you. Q1 of last year is not comparable to Q1 of this year, primarily because in Q1 of last year, we have consolidated the IT operations of Blue Star Infotech, which, as you know, we sold subsequently in Q4 of last year. So while last year's Q1 includes their numbers, Q1 this year does not. So if I remove the Blue Star Infotech figures from last year's results, which is 73 crores of revenue, 10 crores of operating profit, and of course the exceptional item of 35 crores, you'll actually see that revenue for the quarter has grown 29% on a consolidated basis, and the profit before tax, not including exceptional items again, has actually grown by 32%. The growth is primarily driven by the unitary products business, more specifically the room air conditioner segment of ours. Of course, revenue has also grown in segment 1 as well. So it's been a very good quarter for Blue Star.
Yes, it's important that you highlight that this year-on-year cannot be compared really, because we are seeing that definite fall in profits. If you look at it, it's between 51 and 52%. It's good that you put that in perspective. But it's been an unusually hotter summer. Vir, how have volumes been compared to the year-ago quarter? Because as far as room AC sales are concerned, if you can share some numbers with us so that we can put this in perspective as well.
So the room air conditioner market overall, the industry grew 27% in Q1, very strong growth. Blue Star, our business grew by 38%, so we actually grew faster than the market. We ended last year with a market share of 10%. That has improved to 10.6% at the end of Q1. So it's been a good quarter for the industry as well as for Blue Star. Like you summarized, it's largely because of a very hot summer. Of course, the monsoon did start on time, so to that extent we did not get an extended summer, but because the summer was so hot, it more than made up for the on-time monsoon. And as you may know, we need both a hot summer as well as a good monsoon for the room air conditioner business to do well. So I'm happy to say that with this good monsoon underway, we expect that the festival season post-monsoon should be strong as well, especially in Tier 3, Tier 4, Tier 5 markets, which are more driven by agriculture.
Vir, what about the margins? So we've seen pretty steady margins coming in this time around. Do you think they will be sustainable in the next couple of quarters from here on?
Sure. So if you look at margins for the unitary products business, Q1 is always a higher margin than the full year, because Q2 and Q3 margins tend to drop because of the volume drop. Having said that, we expect to maintain the annualized margin of last year in the current year with a much higher volume. So the positive news right now is that volume growth is coming both in the industry as well as in Blue Star, but without any impact on gross margins or operating margins. So we're able to hold prices, and the industry is holding prices. So overall, we expect it to be a good year for the business.
But Vir, also you can't take away from the fact that this is an extremely competitive space. The kind of monies that are spent over advertising and publicity can be huge. Tell us what's it like for Blue Star, at least for the quarter that is in focus right now, the first quarter?
So advertising, promotional spend did grow. We grew by about 27%, if I'm not mistaken, in line with our plan for the year. So as we had mentioned to you, we expected overall volume to grow 25% for the year and for the industry to grow at 15%. Instead, what has happened is that the industry has grown at 27 and we have grown at 38. So to that extent, even in spite of the higher volume growth, We had planned to spend about 25% more on advertising, which we did end up spending. We did not exceed our budgets as far as advertising is concerned. And therefore, on the full year basis also, we expect to maintain this 25% increase in ad budget.
All right, Vir, before we let you go, just a word on what's really your outlook on the capex going ahead. 175 crore rupees, if I'm not wrong, for 2 manufacturing facilities that you've lined up, 30 odd crore rupees for product investment. Are these on track?
Yes, absolutely. I'm so happy you raised that. All of this is, we have a 3-year plan that we're executing right now from FY17 through FY19. That calls for a manufacturing capacity investment. It calls for R&D investment. It calls for an advertising budget growing quite substantially. It also calls for investments into our MEP business and into our service business, more from an excellence point of view. So all of these investments actually are underway. We have started to spend in Q1 and we expect to spend through the year. These investments will yield results over the next 2 to 3 years and position us strongly for the future. So we are well on our way on our 3-year plan as well.
The 3-year plan looks like it's in place, investments are in place, and the outlook seems to be strong by Blue Star. Vir Advani, many thanks for joining us with a look at the first quarter and the outlook as well going ahead from here. We'll slip into a short break. When we return, we continue to talk earnings. This time we bring up Tech Mahindra. They reported earnings that have beaten estimates, but still margins are coming under pressure. What are brokerages saying about Tech Mahindra? That's coming up next. Do stay with us.